Good morning, Steve Free in Chicago with the morning grain comments. We have a mixed trade with wheat and corn continue to trend lower while beans are trying to find a little bit of support. I think there are three things that we're trading in the marketplace. The number one thing is that we're now seeing some peace talks between Russia and Ukraine in Istanbul. And I think the market is relaxing some of the war premium, especially in corn and wheat, if this ceasefire comes out because of this. Again, I think some people are concerned that Russia is focusing on east and southern Ukraine, and that may not be acceptable to Ukraine. But that does allow central and west Ukraine farmers to harvest winter crops and start planting some of the spring crops. We're still not sure about logistics in moving that grain to the export points. The second thing is China. There's an old saying, if China catches cold, the world catches pneumonia. And I think the lockdown in Singapore has raised concern about China importing energy and also other commodities. And so we've seen, especially the soybean market, back off because of this. We also note that there was word that Chinese hog producers are trying to use cheaper feedstuff versus soybean meal. And so some people think that that may reduce their actual imports of soybeans to 90 to 92 million tons from the 94 million tons that the USDA is using. There was talk yesterday on the break in soybean futures. They may have bought somewhere between 6 and 8 U.S. Soybean cargoes. And again, of late, they've been buying 21 and 22, maybe to fill in for some of the beans that won't be available out of South America later this summer. The third thing is the technical side of the marketplace. Again, it felt like from last week's highs, our markets are rolling over. And for the first time since January and February, soybean, corn, and wheat contracts are all trading now below the 20-day moving average. And crude oil is doing the exact same thing. So again, I think those markets need demand news or some kind of, in the grains, weather scare to push back over last week's highs. We also note that managed funds, as percentage of total open interest, is close to record high. And so sometimes if they are the ones left, the largest percentage in the open interest, when we start trending lower and taking out some of these key support levels, they could begin to liquidate some of their positions, which would be more negative to prices. We also note that many of them trade momentum and the 50-day moving average. And right now, the markets are quite a bit above where that 50-day moving average is, especially in the soybeans. So of the three things that we're looking at today, they're negative to the marketplace. On Thursday, we have the USDA stocks and acreage report, and we'll see if that moves the markets one way or the other. As always, these are my thoughts, not those of ADM Investor Services. Have a profitable trading day, and remember, always treat people like you yourself would like to be treated.